have higher non-current assets than current assets, common of a capital-intensive industry. Property, plant and equipment makes up the major portion of non-current assets, while cash and equivalents are one of the higher percentage among the current assets. HPL percentage of equity is higher than the liabilities, indicating that its assets are mostly owned by its shareholders instead of creditors, just the opposite for Banyan, whose assets are supported from creditors. With its lower cost of sale, Banyan has higher gross profit, which is inversely true for HPL. This difference in cost of sale value is probably due to their respective nature of trades. Banyan's revenue mostly came from its hotel investments, whereas HPL was primarily from its hotel operations. And moving on to expenses, Banyan has a much higher total operating expense, mostly coming up from its salaries and related expenses, greatly impacting its net income.
To determine profitability, the first chart we will analyze will be the net profit margin. When viewed over a period, it presents a trend that helps with decision making to improve the company's overall performance. Investors will view this as the company's potential growth for the years to come. Both companies shared a similar trend. A growth in 2013 was followed by a decreasing trend the following 2 years. In 2015, Banyan Tree recorded a loss, indicating the inability to generate profit, which will not impress their potential investors. The return on ordinary shareholders' equity shares a similar trend to the net profit margin. As compared to 2012, HPL recorded a drop of 4.4%, while Banyan Tree's ROE recorded a decrease of 5.81%. Banyan Tree's ROE indicates the company is losing the shareholders' money. It will not give any confidence to potential investors as it will not generate any profits for them.
Banyan Tree's overall cash receipts are likely to increase from 2012 to 2015. However, the major source of cash leakage comes from its operating activities, which is actually in the red. Overall, most of Banyan Tree's cash receipts are generated from its financing activities to keep the company afloat. This is reflected then in the major spike in bad debts to accounts receivable ratio, and this is actually indeed worrying, and the team has actually opined for Banyan Tree to actually tighten up credit management processes. Last but not least, Banyan Tree has actually underperformed against the sector's ratio of 10.25. Again, this confirms the team's recommendation of Banyan Tree to actually tighten up credit management processes.
As for the cash, there is an increase of 90.92% from 2012 to 2015. With that said, according to the annual report in 2012, it was stated that the group maintained sufficient level of cash or cash convertible investment to meet its working capital requirement. For accounts receivable, the highest receivable in 2014 may not be ideal as investments are foregone. Therefore, HPL should better manage their receivable by revising strict credit policy. For cash flow statement, the operating activities has the highest net cash in 2015, which is ideal. As for the investing activities, there is a huge decrease in 2014 due to the investment in D-Liden and the interlaced condominium development in Singapore. From this, HPL has an increase in 2015 due to an inflow of investment from net cash associate and jointly control, according to the annual report 2015 on hotelprop.com. From the investment made, it causes a decrease of repayment in 2015. As for the cash and cash equivalent, therefore, this shows a steady growth from 2012 to 2015.
The decline in ratio indicates that HPL needs to work on increasing their sales volume as the investments in assets has not seen returns. Banyan, on the other hand, needs to work on reducing their financial costs, in which the increase in expense has resulted in the ratio in entering the state of negativity in the year 2015. Banyan has invested an amount of $244 million from the year 2012 to year 2015 in property development. The date of completion amongst the 7 properties goes as far as year 2019 in June. An increase in this ratio should be observed once this property begins operation. On the other hand, HPL can better manage their assets to generate sales by investing the amount owed by associates and joint entities. By allowing that sum of money to idle around, HPL is essentially losing money which they could have earned through investments.
Banyan's solvency saw an increase in 2015, increasing the risk for creditors, thus reducing the opportunity for debt financing. Meanwhile, HPL has maintained about 40% debt and 60% equity throughout, showing that investors, rather than debts, are currently funding about 60% of the assets. It can be seen that HPL is less liquid than Banyan. Banyan's drop in 2015 is attributed to the increase in their operating expenses. HPL's poor figures are due to their accounts payable. Therefore, to improve on their ratio, they should clear off their debts quickly. This causes HPL to pay off their liabilities slower in order to still have cash for unexpected expenses. Banyan's sudden increase was due to the fact that their current notes payable were completely paid off by 2015. To conclude, HPL's overall financial performance is better than Banyan's, excluding its liquidity. However, when comparing the sector ratio, there is still much to improve on. To secure potential investors, HPL should work on improving its liquidity position by either increasing their cash flow or reducing their current liabilities. With that, thank you!